All right. Hey, everybody. Thanks for tuning in. I'm joined by Billy from RE Tax Prep. Today, we're going to talk about another category of tax strategy that enables real estate investors to enjoy significant savings on their tax bill. First, Billy, do you want to just introduce yourself, maybe say a couple points about RE Tax Prep, and then we'll jump into our topic of the day, which is real estate professional status.
Absolutely. So I'm Billy Withers, working with RE Tax Prep to build a tax return firm that can, help real estate investors by getting your tax return done efficiently and correctly, and focusing on real estate investors and helping them implement these strategies in more of a streamlined way than maybe what's currently out there in the market. So very excited about that. I've been helping real estate investors close to 15 years now with tax and accounting strategies. And so I'm very excited to dive into what we're going to talk about today.
Awesome. That's great. It's it's amazing how many folks still don't know about some of these tax strategies, whether it's cost segregation or some of the benefits of short-term rental investing, which we just recorded another episode on. But our topic for this video is real estate professional status. So let's start out with just super basic. What is real estate professional status in the tax code? Like, what does that term mean?
Yeah. So basically, when you have rental real estate income, what that means is that you have typically passive income on your tax return, meaning that you don't get necessarily all of the same benefits as somebody who starts an ordinary business. So the rules for that are governed by Section 469 of the tax code. But 469 also has this carve out where if you're a real estate professional, meaning that you participate in a real property trade or business more than 750 hours a year, and you materially participate in your rental properties, meaning, maybe you self-manage, or maybe you, as long as you can meet the material participation requirement tests, you're able to treat these rental real estate, whether they're income or losses, as non-passive for you. So it basically turns what the IRS says is ordinarily passive income into non-passive income. And that could be a really powerful tax planning strategy, assuming that you qualify for this real estate professional status. And so a lot of people like to use this or try and achieve this professional status for tax purposes, and then also leverage cost segregation studies to really generate the amount of real estate losses that'll help them in order to significantly offset their taxable income. So it's basically like I said, a carve out to use special treatment when it comes to filing your tax return that can save you a lot of money on taxes.
So who can potentially be a real estate professional or someone that could consider taking advantage of this benefit that exists in the tax code for real estate professionals?
Yeah, so assuming that you spend 750 hours and more time than anyone else in a real property trade or business, you can potentially qualify for this, kind of loophole. And real property trades or businesses are defined, so you have to either be managing leasing of properties, managing development of properties. You need to buy and sell properties, kind of like a realtor or a broker. Those are some of the main ways to get that first test in, so to speak. And then, like I said, that's not enough. You have to also maybe manage your rentals, whether you have a short-term rental, long-term rental, mid-term rental. As long as you materially participate in the management of that, you can turn those otherwise passive losses into non-passive. And it doesn't have to be you. If you're married, it could also be your spouse that does that. So we see it a lot where, one spouse is a high wage earner. They decide, the married couple together decides that they want to get into real estate. So the spouse takes the share of the, real estate trade or business, whether they get their realtor license and become a realtor and then also manage the rentals, or they just spend 750 hours managing rentals. That's more than enough too. they're able to take that their spouse's W-2 income and reduce the taxes on that, which is super powerful.
So if you're watching this and you make a lot of money in a normal job and you're very interested in starting to invest in real estate, but you're also looking to find a partner to settle down with, it can be beneficial to find someone who is either already, a realtor or working somehow in the real estate market, or find someone who's interested in doing that, because it doesn't have to be you necessarily. It could be your spouse that qualifies for real estate professional, but then you both get to benefit if you're filing jointly.
Exactly. And people say, oh, I only spend 1,000 hours at my, 40-hour week W-2 job because I'm spending the rest of my time in real estate, whether that's, in between meetings, things like that. Usually if you have a full-time W-2 job, the IRS almost 99 times out of 100 is going to say that you did not, you could not be a real estate professional, because there's no way that you actually spent more time in real estate than not. So yes, if you are a high wage earner and you don't want to leave your job, pretty much the only option, unless you are self-employed real estate professional already, of course, then pretty much your only option is to marry a real estate professional, so to speak.
So could we put some numbers on this in kind of like an example, just at a really high level? Let's say you're a high income earner. You have a $500,000 W-2 job, and you have a spouse who qualifies as a real estate professional. You live in California, so you're paying close to a 50% effective tax rate between federal and state. That spouse being a real estate professional gives you access to this real estate professional, kind of bucket of tax benefits, and you buy a property. What is the actual implication of this, and how would it look at a high level potentially with some numbers?
Definitely. So, it's interesting that you call out California. Obviously, the tax rates are brutal, but then also sometimes with, different states, they have different rules around, bonus depreciation, things like that, which is one of the main drivers of why people want to get into the real estate professional status. So, but basically to answer your question, if you have a $500,000 W-2 and your spouse wants to manage a real estate portfolio, you could buy a $500,000 property, go to RE Cost Seg and get a cost seg on that property, maybe get about 90 to 100,000, maybe even more deductions that you can write off in the first year from that cost segregation study. Then turn around, put that against your W-2 income. Your income goes from 500 to 400, and at least for federal purposes, you'll probably get a $35,000 tax savings roughly. And then at the state level, like I said, maybe we have to add back that bonus depreciation. But if it's still a net loss overall, you can still reduce that, and that'll save you maybe another 13% or so in California. So it is huge with or without the cost segregation study. But the cost segregation study really saves you because the federal tax level the federal tax rate is so high.
Now, let's say you're that same high income earner, $500,000 a year W-2 income, but you're not married, you're single. My understanding is that the odds of potentially being able to claim that you're a real estate professional, irrespective of how much time you might actually be spending doing real estate stuff, is very, very hard to do. Is that in line with how y'all approach this strategy?
Exactly. Yeah, that's speaks to a little bit of what I was saying before, where you may not be able to qualify as a real estate professional because you don't participate in a real property trader business more than half your time, or at least the IRS. You won't be able to convince the IRS that you do, even if you potentially do. That said, though, we have had success where people are pilots, doctors, actually only working 2 or 3 days a week. And they can count up that time, and it actually is only $1,000 1,000 hours on the job. And as a result, if they can prove that they spent 1,001 hours in real estate, we're always comfortable, taking that position. So certain professions we can still make happen with a real estate professional, even if you're not full time into real estate.
And if someone is, watching this and thinking, okay, I'm on the fence, or I definitely qualify for real estate professional, but I've never talked to my CPA about it, or I tried to talk to my CPA about it and they didn't understand what I was talking about. what's the best way for someone to, potentially engage with you or, other folks on the team at RE Tax Prep on this topic?
Yeah, so we're definitely going to be able to help somebody in that position. What we recommend is that you document all of your hours. Like I said, if you have a full-time W-2 job that's not in real estate, but you don't work 2,000 hours a year, 40 hours a week with it, if you kind of have a non-traditional schedule, log out all of that time, log out all of your time as a real estate professional, meaning, like I said, managing rental property, things like that, to get the material participation, or, first of all, your 750 or more hours in real estate, but then also your material participation in your passive rentals. If you can, produce those time logs for our team, we're going to be able to help you out regardless. So definitely that would be my recommendation, is tracking those hours.
Great. Is there anything we didn't cover on real estate tax professional status that you think we should?
Yeah, I would say the one thing perhaps that we did not cover is there's a grouping election, which gets maybe a bad rap. And I just want to explain that in depth because it could also be very powerful if you understand what you're doing. So sure. When it comes to, let's say you're a realtor, you already are a real estate professional, or even if, your spouse says, it doesn't matter. But for simplicity's sake, if I'm a real estate professional and I am managing my, passive rental properties, self-managing, getting that material participation. But maybe I have some out-of-state rentals, or maybe I'm thinking about a syndication. You can elect to group your passive rental investments into the ones that you materially participate, treat them as one enterprise. And then what that does is it says, even though I'm not, materially participating in this syndication investment or this out-of-state rental property investment, I can treat them all as one business enterprise and then say that I materially participate in this entire enterprise. And then without adding to your workload, your plate of things you have to do every day, you can treat this as you can generate a lot more losses without necessarily adding more work to your plate. So it can be really powerful. It gets a bad rap because if one of those investments goes south, you may not be able to deduct the entire loss in the year that it goes bad or sour. So like I said, you have to really understand what you're doing, really weigh the risks of that potentially happening down the line. But if you just wanted to add, like a larger complex to your portfolio, but passively invest with it, it could be a really good option for you to get a lot of deductions in the same tax year that you qualify as real estate professional without necessarily, adding a lot of burden to your plate in terms of material participation in the property. So we help people with that a lot and help them understand those, help people weigh those pros and cons. And that's definitely something that we can do with RE Tax Prep as well. So
that's interesting. And that's just an election. It's not like you're not necessarily like creating a new LLC or something and managing, an actual business structure. It's just a tax election.
Correct.
Interesting. Yeah, I hadn't heard about that before. So I learned something today.
Good. I'm glad.
Well, Billy, this has been awesome. If you're interested in learning more about real estate professional status, check out some of the resources that are available at retaxprep.com. Billy and the team there are experts in this stuff, and they're happy to work with folks on figuring out what the right strategy is for you, whether it's real estate tax professional or real estate professional status or some other strategy related to real estate and the tax advantages that come along with it.
Thanks for your time today. I was glad to be able to have this discussion.
Thanks, Billy.